Pay close attention to what I'm about to tell you, because the window of opportunity to protect your assets is closing irreversibly right now. Immediately discard any idea that the following content is just another cheap conspiracy theory, generic financial alarmism, or clickbait designed to scare beginners. What we're going to dissect here today is a tectonic fracture in the global financial architecture that has already begun to silently crumble beneath our feet, while the mainstream media and analysts from large brokerage firms continue to anesthetize the public with irrelevant distractions and concocted narratives. You are about to access a level of market intelligence that the system would do anything to keep hidden. The evaporation of structural liquidity is already an irrefutable mathematical reality, and the imminent implosion will not forgive ignorance. The trigger event that inaugurated this death spiral was activated this February 2026 with a gravity that very few can interpret. Official data, camouflaged in technical reports from the CME Group that the average citizen would never access, shows that the stock of the registered category, the actual physical silver available for immediate delivery on the COMEX exchange, plummeted violently below the critical mark of 100 million ounces. We are talking about a staggering drop of 38% since October 2025 alone. The physical safety net of the world's leading exchange has practically disappeared, being voraciously drained by institutional sharks who have already smelled blood in the water. They have abandoned the rolling of paper contracts and are demanding the delivery of the real asset, proving that the global vault is tragically empty. To confirm that we are facing a terminal collapse and not a passing fluctuation, we need only observe the relentless compass of the Asian market, which is already actively pricing in the death of the Western derivative system. At this very moment, premiums for physical silver in Shanghai have exploded, creating an unsustainable distortion of $5 to $8 per ounce above the falsified reference prices imposed by New York and London. This is an extreme mathematical anomaly, a true cry for help from the real economy. This brutal fracture attests that the East has rejected the lie and realized that the plumbing of the American system is clogged with empty and fraudulent promises. When the last thread of trust is definitively broken and the panicked herd desperately runs for the same tiny exit door, the systemic trap will close on everyone's wealth. To understand the magnitude of this impending catastrophe, you need to swallow the red pill and see the true mechanics of the collapse that underpins the current pricing illusion. We are not dealing with a traditional bull market or a typical commodity cycle, but with the terminal implosion of silver derivatives engineering. The Western financial system has built a monumental house of cards based on a lethal trick called rehypothecation. In simple and brutal terms, banks sold the same ounce of physical silver to 10 different investors through futures contracts, which are nothing more than empty promises on paper. This is the true systemic trap, a mathematical fiction created to artificially suppress the real value of the asset and keep the masses anesthetized and confident in an ecosystem that is fundamentally broken and rotten from within. The security perceived by the public and touted by the mainstream media is a colossal sham, a fragile veneer about to shatter. The market closing last Friday above historical structural resistance levels was not a mere technical detail. It was the final trigger that initiated the death spiral. The uncontrollable institutional demand for physical delivery collided head-on with essentially empty coffers. Imagine a high-pressure pipeline being abruptly blocked. The accumulated energy doesn't simply disappear. It seeks the weakest breaking point and explodes the entire structure from the inside out. Large investors realized the musical chairs game was over and the music had stopped. The perverse mathematics of rehypothesizing failed miserably, as it's impossible to deliver what doesn't physically exist when everyone demands liquidation simultaneously. The next stage of this inevitable implosion occurs where the average citizen cannot see it, in the lethal strangulation of the Asian time zone. The mechanism that is now fatally fractured is the complete overnight illiquidity operating against the massive and merciless flow of institutional algorithms. The collapse happens during the Western dawn, at the exact moment the Asian markets open, when the depth of the order book is practically non-existent. Imagine a cracked dam facing a sudden tsunami. The minuscule volume of available contracts cannot absorb the avalanche of buy orders programmed by high-frequency trading robots. It is a perfect mechanical asphyxiation designed to obliterate any attempt at price control by Wall Street manipulators. The evaporation of overnight liquidity makes it absolutely impossible for the market to rise gradually, logically, and in an orderly fashion, translating the disaster into inescapable reality. We have approximately $2.3 billion in massive quantitative fund capital already surgically programmed to swallow the offerings in last Friday's brutal breakout. This colossal force will collide with the microscopic liquidity of Sunday morning in Tokyo. This violent imbalance is multiplied by the beta of metals, which is the historical accelerating factor in moments of absolute supply panic. The billions of dollars from institutional robots will sweep through the empty order book like an uncontrollable firestorm, consuming dry straw in the dead of night. When this inevitable collision occurs in the dead of night, the price surge will not be linear. It will be an uncontrollable vertical detonation. The systemic dominoes have already begun to fall, and the chain reaction is irreversible. The market will suffer a violent and terrifying shock, instantly disintegrating the positions of those who believe the reassuring narratives of the mainstream media. If regulators panic and invoke force majeure clauses, forcing the compulsory liquidation of purely cash contracts to protect the exchanges from the abyss, disaster will be sealed. This desperate maneuver will mean the definitive collapse of confidence in the paper market, breaking the last link that still connects the fictitious derivative to the tangible physical asset. The financial system will irremediably implode under the weight of its unsustainable contradictions and lies accumulated over successive decades of continuous manipulation. As a direct and catastrophic consequence of this inevitable rupture, the price of physical metal in the real world will skyrocket, violently decoupling from the illusory value flashing on brokerage screens. And who will foot the bill for this tragic difference? The retail investor, blinded by the system, who will be trapped and stuck in the clutches of New York. When the opening bells ring on Wall Street on Monday, the systemic trap will have already swallowed its victims, liquidating their synthetic assets for inflated crumbs, while real silver becomes inaccessible. This is the anatomy of a premeditated financial extermination. The elites secure possession of scarce physical metal through the Asian decoupling, while you, who blindly trusted the rotten plumbing of traditional financial institutions, will watch the painful and complete evaporation of your purchasing power overnight. To understand the sheer gravity of what we are facing in the coming hours, we need to look at the wreckage left by past disasters. The financial system doesn't suffer accidents. It operates in mechanical cycles of destruction and wealth transfer. The current scenario we are outlining is not an isolated event, but an exact mathematical collision with the scarcity crisis triggered by the Hunt brothers in the emblematic year of 1980. Back then, the same warning signs that the mass media tries to suppress today were already flashing bright red on the dashboards behind the scenes. The mere perception of a real shortage of the physical asset generated terrifying price jumps of over 30% in a single bloody weekend. The historical pattern is immutable. The authorities always vehemently deny the problem until the final millisecond before systemic catastrophe. Now combine that inflationary shock of the 1980s with the visceral liquidity panic we witnessed in March 2020. While the masses frantically watched the price quotes on their screens, we witnessed the definitive fracture between the paper lie and physical reality. At that moment, the price of silver displayed on your computer monitor plummeted to less than $12 an ounce, suggesting that the metal had lost its value. However, in the real world of stores and private dealers, it was absolutely impossible to buy a single physical silver coin for less than $25. The paper system had imploded, creating an optical illusion to trap the unwary, while insiders accumulated tangible assets at an absurd premium. Those who ignored this lethal asymmetry and trusted the system lost an irreparable fortune. History teaches us with a cruel pedagogical approach that this divergence cannot last forever. Financial gravity is relentless and always demands its structural debt. When the dissonance between fictitious paper money and tangible scarcity reaches its critical limit, trading systems simply freeze. Circuit breakers are triggered, brokers freeze retail accounts, and the price of the derivative undergoes an extremely violent realignment shock to forcibly adjust to the brutal scarcity of the physical world. It is at this exact breaking point that the tension between the intelligent individual and the broken system reaches its climax. Those who place their blind faith in the empty promises of institutions awaken to discover that their wealth has evaporated, sucked into the black hole of the systemic trap we warned about from the beginning. The visceral fear you feel now as you observe the instability of the markets is absolutely valid and rational. The great collapses of 1929 and 2008 followed exactly the same funereal choreography of institutional denial, followed by a sudden annihilation of capital. It happened before. The technical signals were frighteningly the same as those that today's charts vomit in our faces, and those who chose the comfort of ignorance were summarily massacred. The current financial architecture is repeating the same death spiral, with the same variables being manipulated by the same actors who profit from your vulnerability. The historical proof is irrefutable and stares us in the face. When the illusion of liquidity finally collides with the hard wall of physical reality, there is no possible rescue for those who position themselves on the wrong side of history. The abyss already awaits us, and the countdown has begun. If you still naively hope that the Federal Reserve, global central banks, or Western governments will descend from the heavens as saviors to rescue the system at the last second, it's time to wake up to the institutional nightmare. This time, there's no magic rabbit to pull out of a hat, nor a billion-dollar bailout capable of plugging the physical hole. Financial authorities are hopelessly cornered, trapped in the perfect metaphor of being between a rock and a hard place. On one side, the brutal suffocation of a lack of real silver. On the other, the detonation of a time bomb of paper derivatives. The money-printing machinery that saved the markets in the 2008 collapse and the 2020 panic has become completely useless against the mathematical and physical scarcity of a tangible asset. The institutional safety net you believed existed has already disintegrated. Understand the physics of this disaster. You can print trillions of dollars by pressing a simple button at the central bank, but it's physically impossible to print a single ounce of silver on a computer. If the authorities try to flood the market with artificial liquidity to save brokerages and large banks that are short-selling, they will only inject nuclear fuel into the death spiral. This desperate monetary injection, typical of someone who has lost control of the steering wheel, will result in rampant inflation that will devour the purchasing power of the population in a matter of days. The Federal Reserve's balance sheet data for February 2026 already demonstrates a completely unsustainable saturation. Any move by the system to try to contain the price collapse will be like trying to put out a forest fire by throwing gallons of gasoline directly into the epicenter of the uncontrollable flames of the real economy. The remaining alternative for the system is even more cruel and draconian. When the mathematics of rehypothesizing publicly and undeniably fails, exchanges like COMEX will have no choice but to invoke obscure force majeure clauses, freezing withdrawals and implementing severe capital controls on retail investors. They will freeze your screen, prevent your escape, and forcibly liquidate your synthetic contracts, paying you in a fiat currency that no longer buys anything in the physical market. This is the true systemic trap. The rules of the game were designed to protect the casino's architects, sacrificing the average individual on the altar of corporate insolvency. Liquidity evaporation will be legalized by government decree, and your digital assets will be legally blocked to cover the billion-dollar losses of the international financial elite. It is precisely at this terminal breaking point that the historical tension between the intelligent individual and the broken system becomes a matter of pure survival. While television news channels plead for calm and politicians promise illusory solutions, insiders will already be finalizing the looting of nearly 40% of global reserves, ensuring their own physical protection beyond the reach of the confiscatory state. Large banking corporations know they are sitting on a derivatives implosion, and their only contingency plan is to throw you, the unsuspecting investor, in front of this runaway train. The illusion that the government exists to protect your financial sweat is the most successful scam in modern history. The system is not failing by accident. It was meticulously designed to suck your lifeblood in moments of extreme liquidity collapse. Don't be fooled into thinking there's time to deliberate or await reassuring guidelines from regulatory agencies, because by the time the official announcement of the stock market freeze is made, the gates of the cage will already be locked from the outside. The machinery of the institutional trap is perfect. If they print money, they destroy the value of the currency. If they don't print, the brokerage firms collapse and pulverize your money along with it in the implosion. The alert and sovereign individual needs to immediately internalize that rescue will not come from higher authorities. The cards have already been dealt, and the financial ceiling is about to collapse on the heads of those who trusted in the integrity of digital screens. Faced with the multiple and widespread failure of all state and corporate defense mechanisms, the only rational way out requires you to abandon blind submission and position your capital defensively before the catastrophe. The traditional financial market will mercilessly punish anyone who tries to react only after the opening bells ring in New York this Monday. Survival and formidable profit in this catastrophic scenario require prior allocation entirely outside the compromised digital network. Your first step, your absolute defense against the death spiral, is to immediately remove counterparty risk from your asset equation. The primary and non-negotiable protection is the acquisition of strictly privately allocated physical silver, whether in solid bars or recognized coins, held entirely outside the confiscatory jurisdiction of traditional banks. Physical metal doesn't cowardly freeze on your brokerage screen and doesn't zero out your position against your will when panic sets in. Having the real asset in hand is the only guarantee of sovereignty when liquidity evaporation paralyzes the system. Your second step requires a surgical strike against the lies of the market, cutting ties with toxic derivatives before they drag you to the bottom of the abyss. Immediately flee from synthetic ETFs and paper-backed financial products, such as the infamous SLV, which are veritable systemic traps designed to liquidate shareholders in worthless fiat money during a force majeure crisis. When the implosion happens, the managers of these funds will use fine clauses to confiscate your right to the real metal, handing you dollars devalued by rampant inflation. The tactical target should focus exclusively on tangible assets, absolutely immune to over-the-counter risk. You cannot allow your wealth to be obliterated by a virtual contract that institutions can simply cancel or evaporate with a mere click on Wall Street servers. Position yourself against the flow of the masses who believe in the illusion. The third and final step is your masterstroke to profit asymmetrically from this historic structural collapse. While most mourn the loss of capital in the implosion, the sovereign investor surgically attacks the stocks of silver mining companies that possess shielded financial balance sheets and extremely high operational leverage. These companies are the true gold mines of this chaotic cycle. When the liquidity shock hits the Asian time zone and shatters the charade of Western paper money, the value of the metal in the real world will experience a stratospheric leap. Consequently, these solid mining stocks will open the trading week displaying astronomical premiums, already pricing in the metal's overnight surge. Strategically positioning yourself in these counterflow vehicles ensures that your assets not only survive the systemic evaporation, but multiply exponentially while the rest of the global market bleeds into the trap it helped finance. What we have just deconstructed here is not an isolated event ending next Monday, but the epicenter of an ongoing tectonic fracture that will engulf the global financial system in successive phases of pure agony. The mainstream media, fed by the very banks that are on the losing end of this mathematical implosion, will spend the next few weeks blatantly lying to you, forging narratives of temporary relief while COMEX coffers continue to be brutally drained in the dead of night. The evaporation of liquidity will not make headlines on the evening news until it is too late for the crazed masses to react. This is precisely why you cannot treat this channel as mere casual internet entertainment. We are your anticipatory radar, your inexhaustible source of continuous intelligence operating in the trenches against the deafening noise of the broken establishment. In this scenario of absolute asymmetry, unfiltered information is the only tangible shield between your hard-earned wealth and the death spiral already consuming Western derivatives. I'm not asking you to simply like this video to massage empty algorithmic vanity metrics. I'm summoning the intelligent individual to immediately subscribe to this base of operations to track the unfolding of this colossal crisis in strictly real time. When the dominoes of the systemic trap begin to tumble in rapid succession, destroying fiat economies around the globe, you will need a paternalistic and relentless guide to interpret the chaos. Subscribing now means securing your place in the lifeboat of cold rationality, shielding your mind from the widespread panic that will inevitably overwhelm those who blindly trust in the protection of the state. In addition to sealing your commitment to the truth, by joining this community of sentinels, it is vital that you activate notifications with maximum urgency, because timing will be the sole arbiter between your financial survival and your complete ruin. In an environment of structural collapse, where the architecture of the markets can be frozen by authoritarian decrees in a matter of hours, receiving our alert a day late is equivalent to being present at the epicenter of a nuclear explosion. We will continue to monitor the Asian decoupling and the lethal strangulation of the Eastern time zone, bringing surgical reports whenever a new anomaly threatens your capital. The war between physical reality and paper fiction demands uninterrupted vigilance, and we will be your main line of cognitive defense against the lethal illusions of Wall Street. Now I demand that you descend to the comments section and account to this community of liberated minds, for tactical debate is fundamental to our collective strengthening in the face of imminent collapse. What is your exact current risk exposure ratio? Do you already possess physical silver under your sovereign custody, beyond the reach of bureaucrats? Or are you still holding the pinless grenade of synthetic contracts and ETFs like SLV, waiting for a miracle that will not come? I want to know how you plan to strategically position yourself when the markets open tomorrow, when institutional buying pressure crushes the empty order books. Your statement in the comments is not just a response. It is a personal declaration of war against the institutional trap that attempts to keep the herd perpetually docile, disarmed, and impoverished. We have reached the point of no return, and the tension between the intelligent individual who sees the cracks in the hull and the broken system that demands total submission has never been so palpable, dark, and definitive. The evaporation of liquidity has already begun its subterranean demolition work, and institutional coffers will continue to bleed real metal while the global mass is distracted by the shadows projected on the wall of the media cave. Keep your tactical discipline sharp. Execute the asymmetric protection steps we outlined today with calculated coldness, and do not yield an inch to despair when the stock market circuit breakers begin to shut down. You now carry the weight of irrevocable truth and possess the map to escape the implosion. Remain strong, stay absolutely vigilant, and survive the inevitable physical correction of history.